Hi everyone, this is Eliza from marketing. We are about to get started with our webinar, but just as you guys are filing in, I wanted to go over some of the, I don't know, I guess technical details. So if at any time you have a question during the webinar, go ahead and write that either in the chat section or in the questions section. I will be monitoring both of those and either pipe up and say your question or we'll address it at the end for everyone on the call. We are going to be going over a couple of different things that you might want to review. So we are recording this webinar and you will be able to share it with friends and family as needed, because a lot of this stuff is going to apply generally to them too, even if they aren't necessarily in the accounting industry or technology or anything like that. As we all know, this kind of is affecting everyone. We are also offering CPE credit for this. So that means there are going to be 3 poll questions. I'm going to give about 2 or 3 minutes for each poll question to be answered, just so that everyone has time to do it. I'm also going to post the CPE documentation in the chat, and you can find it in the invitation link as well. For anyone who is going to be getting credit, we will send out that documentation to you over the next couple of days. Usually it just takes a day or two to receive that. So with that, I'm going to go ahead and launch the first question. So simple yes or no question for those of you who are eligible for the NASBA CPE. You can go ahead and answer this one, and I'll just give you a couple of minutes to do that. One more detail as well, we are going to have some slides available, so if you will have those pop up on the screen during Kalen's section. Yeah, so I'll give you another couple of seconds to fill out the poll. Make sure if you are going to be wanting that credit that you do go ahead and fill this out, because you do have to hit all 3 of those in order to do that. All right, cool. I'm going to go ahead and close this poll and hand it over to Jason, who is going to kick us off.
Good afternoon, everyone. I'm looking at the clock and I think it's at least afternoon in every time zone that we are working in. So appreciate you taking time. I'm just they asked me to spend just a few minutes introducing this webinar. It's a pretty cool thing. We are approaching 5 weeks in this current environment, and it's still remains a little bit strange. And I'm sitting at the office. I come into the office every day. As all of you know from my emails, we are not officially closed, but there's a small skeleton crew here, the mail, going through the mail, and other operational things need to be done. So but it does feel a little strange, and I can't wait for it to get back to more people and more adult conversation inside the office here. It's been challenging to say the least. I mean, that's I don't think there's words left to describe all of this, but it's also been very enlightening this time period. We're learning a lot, and we remain focused on our client service. Our CX remains strong. Our team collaboration, despite the distance and the remote working, has been phenomenal. And our work from home has been tested under fire. I'm kind of smiling as I say that, because it not only was it during busy season, but we ramped it up in about a matter of days, if not hours, what it felt like. So that's been a great learning for us. It's been educational for us here at the firm as well. But I also just might want to make sure that you all understand that every day the senior leadership team is analyzing, planning, building strategies, controlling what we can control, so that when the restrictions are lifted, when the economy gets the green light, when everything's back in place, and we've resisted saying new normal, because I think this is normal now for a certain component of this. We're going to be ready to go. We remain focused on our clients. We remain focused on the marketplace. But most importantly, we remain focused on you, our folks, our people. This webinar is a great example of us challenging ourselves to do things differently while still engaging all of you. So finally, as I said in my emails, I could not be more proud of our firm. I could not be more proud of the partner group and of all of you and everyone on this webinar for the contributions that you're making, the challenges that you're facing. It's not easy. We all recognize all of the impact that this has had, and more to come perhaps. But again, I could not be more proud to lead the team at Richey May. And with that, I'm going to turn it over to Kathy to get this webinar officially started with the educational piece.
Thanks, Jason. Thank you, everybody, for being here. I know it's been quite a few weeks for all of us navigating what it looks like to work from home. We now have parents that are full-time teachers, and they're trying to navigate what that looks like for them and their families. So I just want to encourage all of you to continue your outreach to your teammates, checking in, making sure that everybody feels taken care of during this time. Just briefly, this webinar came about just because an employee asked, what does the stimulus package actually mean for me? And then we realized with all the changes that have come in the recent weeks that it's natural everybody's going to have questions. There's a lot of different scenarios for all of our individuals. So we realized we had an incredible opportunity to get education out, especially in cybersecurity. I had an incident myself last week where I had to reach out to JT and ask for some help. So with that, if you guys have any ideas about items you'd like to see put forward on these webinars, or if you'd like yourself to teach, we definitely encourage you to reach out. We would be happy to have you. I just wanted to take a couple of minutes and speak very generally about some resources available for all of you. We have been disseminating information that we think could be of use to you, but again, can never anticipate personal situations or outcomes for all of our employees. So I want to encourage you to utilize your HR team to get the resources that you need the most at this time. A good place to start, as we've sent out a couple of times, is the Employee Assistance Program. It's a great program. It's completely confidential. Nothing is reported back to the employer, and that flyer is available on a day at Richey May if that would be something that would be of benefit to you. There's also been a lot of information coming out the last few weeks about the new leave laws. Kalen will touch a bit on that, and then we'll also be sending out a resource guide that will include a helpful link with the DOL FAQ site. As with anything that's going on right now, that is changing on a daily basis, so that information is updated all the time. So if you don't see your answer on there, it may show up the next day, or by all means reach out to us and we'll get our resources on the line to get you the answer you need. And finally, some changes will be coming to the 401k plan. We'll send information out as soon as this is live in our plan, but there will be COVID distributions available for those affected. We'll also be including information from our third-party administrator, Amagi, if you need education on your plan at this time, or if you want Fidelity's information, we'll include that as well. Just make sure you're using whatever resource is the best for you. I know I've only covered a few things. There's a ton of benefits out there. So again, I just encourage you to reach out to your HR team for anything that you might need. And again, everybody, please take care and thank you for your time. And with that, I'll go ahead and turn it over to Kalen.
All right, thank you, Kathy. Quick tech check. That is is the slide deck viewable now?
Yes.
All right, perfect. All right, thank you, Kathy. I guess I'll just I'll make one quick correction to your comments. I didn't actually plan and institute into this coverage of this material any of the leave requirements, because I really focused on the CARES Act and where the the most dollars economically, the economic support that's coming from the federal government is being focused. Now, a lot of that is in the form of helping employers provide leave either for family or for sick purposes to their employees, and to kind of support them through financial means while they're on this leave. But in the interest of time, I guess maybe that could be the first. I'll submit the first idea for maybe the next webinar topic, as that probably won't be covered in too much detail today. All right, so like Kathy stated, we've gotten some questions from our own internal, I'll call them clients, but our employees. We've definitely I've spent hours and hours in the materials that have been coming out, and the government guidance that's seemingly voluminous every single day, and then those that read it and interpret it and issue more guidance. It's guidance on top of guidance day after day. And we were definitely diving into the details of this stuff, but with a lens more towards our clients, me in particular, are clients that are mostly small businesses, closely held small businesses, and what the government is doing to support those types of entities during this hard time. But in getting the questions from our own internal team, I realized there's all this stuff and all this information out there, and a lot of misinformation too. And we should probably be focused in giving guidance to our internal people as well. So it was tough for me to, I'll just state one last thing before we jump in, that it was tough for me to, take my tax background hat off and really keep this high level. So to the extent I see we have that, it's awesome. I think we have 125 plus attendees on the line right now. So I know a lot of you have very in-depth experience in the tax world. A lot of this is framed around tax provisions. Please, bear with me a little bit, because I know your struggle. We want to get down in the nitty-gritty details. We want to talk about all the exceptions. I'm just going to skim the surface and make sure that people, I'm going to try to put things as much as possible in the general consumer terms, and not really get into the rabbit holes of all the exceptions and ifs upon ands that the tax law usually entails. So with that, just quickly a brief rundown of what I plan on covering. One thing that wasn't in the CARES Act that came pretty early on, if you've been living under a rock or have tried to really distance yourself from technology and the news sources, you might not know that look, we're at April 14th right now. Nobody's freaking out tomorrow about filing their tax returns, and that's because tax day got extended. From there on, I cover topics that are a part of the CARES Act that was recently passed end of March. And really I'm focusing on, again, a lot of the individual provisions or changes that the CARES Act made, things that impact the masses, not necessarily the business or special interests or other kind of local government support that the CARES Act also offered. So we're going to kind of stay in the realm of the recovery rebates or stimulus checks, as some of you may have heard them referred to, retirement plan, distribution changes, charitable contributions, changes around that, and then some changes to student loans. The majority of our time really will be spent right in that second topic, recovery rebates, and those $1,200 checks that some of you potentially have already received. Realizing it now, I should have asked a full question on that. Who to this point has received their rebate? Because supposedly the IRS issued their first round of them on Friday. But anyways, we'll hop right in. This works for me, technology. All right. So tax day extended. Like I said, if you didn't know already, that's pretty unprecedented. In my career, it hasn't been the longest, but this is something of a very unique circumstance that I'd never thought I'd see, but as a part of, lifting stress off of the American taxpayer, the federal government, they actually technically used the Stafford Disaster Relief Act to declare that the country was in an emergency declaration. And with that, President Trump asked the IRS to provide relief to American taxpayers on deadlines who had been adversely affected from the COVID-19 emergency. Now, obviously, that's widespread enough. Everyone's affected. So the IRS pretty quickly came out with a revenue ruling, I think it was, to effectively extend the tax deadline. So what everyone knows about tax day, April 15th, unless it falls on a weekend or holiday, just replace that date in your mind for 2020 filing season, meaning 2019 tax returns. April 15th is replaced with July 15th. As soon as the federal government did this, obviously everybody's focus and attention said, well, that helps, I appreciate it, but what about states? Am I still gonna have to file a state tax return? And if so, states key off of my federal information. So really it's gonna be no less burden to get all my documents put together, get my tax return filed so that my state tax return can start in the right place. So most states quickly were luckily able to follow suit. There's a handful of states that don't have income taxes. For purposes of our audience, from what I know off the top of my head, all of those states that we have employees kind of tuning in from right now, all those states are good, except maybe Eliza out there in Virginia. Virginia is one of, I think, 3 states that haven't necessarily conformed to an extension to July 15th or later. I think that the rule in Virginia, Eliza, this is just for you now, is their filing deadline has always been May 1st, and while they allowed for a extension of time to file till June 1, you still have to make any tax payments by May 1st. So, anyways, hopefully you already got them in, but anyways, most states followed suit, so you don't have to really worry about that. Real quickly, too, the estimated payments, many on this call that are really your source of income is through employment. You generally don't run into estimated payments, right? But again, if you're helping family members or they're coming to you because you're a CPA or work for an accounting firm and you should know these things. If they have a small business or something or a source of income where their taxes don't get paid through withholding from their employer, they probably are potentially making estimated payments. So they're used to making payments on a quarterly basis. April 15th would have been the first quarter's payment due date for 2020. That's also pushed to July 15th. Now, you'll see in that little graphic that on June 15th, the second quarter for 2020 estimated payment is due. That obviously doesn't make too much sense that a month prior to your first quarter payment, your second quarter payment is due. But when you think about how those things work, really, you should be able to avoid, if you're an estimated taxpayer, any payments or penalties on late payments up through July 15th, in that all you have to do is include a cushion with your first quarter payment to account for your second quarter payment. And even though this concept is that any cushion will be applied forward, it'll be applied forward in the sense that it will go towards Q2, but when you look at it on a timeline, it looks like it effectively goes back. So anyways, the point there is don't worry too much about that second quarter payment. Just come July 15th when you're making Q1 payment, or even maybe a 2019 tax extension payment, build in some cushion that accounts for those quarterly payments.
We actually are getting some feedback from Gina and Steve that please note the IRS issued a notice late last week that also postponed 2020 Q2 estimated payment to July 15th. So just word to the wise there.
I knew I wasn't getting the most up-to-date source information from this, so thank you. Please do that throughout this presentation too. If there's more updated information, I appreciate it. Another date tied to that, April 15th, that is extended to July 15th, are kind of those late IRA contributions or employer contributions to qualified retirement plans, and also HSA contributions. So up through July 15th, you can make those types of contributions and still apply them back to the 2019 tax year, if you'd like. All right. So I wanted to start here with the CARES Act stuff, just to give you a visual. I know it's really hard to see, really small. Hopefully you can grab a slide deck and blow it up a little bit later, but this is just, it helps visualize where all of the stimulus dollars are being allocated. And we are only, like I said, we're only skimming the surface on that very top neon green section here today. And even within that green section, it further breaks out the very top $300 billion in cash payments. That's what I refer to as those recovery rebates or stimulus payments. That's what I wanted to clear up some, debunk some myths or clear up some rumors on. I'm not going to spend any time on all the extra unemployment benefits and insurance that's support that the federal government's offering. That's that middle 260 billion. But then there's a little small sliver in that bright green that talks about student loans and other small individual assistance programs that the CARES Act talked about. The rest of those colors illustrated there, we could have on some of them, we could have a 3-hour session if we wanted to, but we'll save that for another time and go over this individual stuff. And hopefully provide some value to you guys. All right, so the hot topic. I can't even, I can't consume any media online, on TV, anywhere without hearing about something around these recovery rebates. So I actually hear them most often referred to as stimulus payments. I don't know why. You can search the actual CARES Act, the bill, all 900 some pages of it, and not find the word stimulus. But I think in years past, payments like this have been used with the hopes of stimulating the economy. I think there is a small hope that that's what happens here after the IRS gets these in the hands of US consumers. But it's different this time around, right? Because this is so widespread and it's not really concentrated on one industry. It doesn't prefer, for instance, the financial sector like 2008 and 2009's crash did. So I don't know if I have no idea if the government was thinking about psychology of the US taxpayer or what, but they definitely just refer to them as recovery rebates as opposed to stimulus payments. But and then the IRS has dubbed the advances, these cash payments, the IRS you'll see the IRS refer to them as economic impact payments. But anyway, the $1,200 Trump checks, that's what we're talking about. So everything I read and study on these, it's really best understood through just a FAQ type format. So we'll kind of follow that through these slides. But what are they? From a structure, the basic structure of these is that the mechanism, I guess, used by Washington and legislatures is to use a new section of the Internal Revenue Code, and it basically just creates a new refundable tax credit for the 2020 tax year. Now, how is it that a 2020 tax credit, when we're only a quarter of the way through 2020, is generating early checks of cash deposits? It's because they included in the CARES Act this provision for the IRS to issue advance payments of this credit. So even though it's a 2020 tax credit, they're looking backwards into 2019 and 2018 or by other means, as we'll see in a second, to calculate an amount that they are going to issue it and deposit or send a check to US taxpayers. I think that probably is where some of the rumors stem from, upon first read and knowing it's a 2020 tax credit. your mind immediately starts to think about a reconciliation process once you file your 2020 tax return. But we'll see that doesn't yield negative results here in a second. The most pervasive or widespread myth that I see kind of promulgated out there is that this any income, right, is taxable income. That's kind of the general rule, but just understand, and if you hear anything to the contrary, it's not true. These payments are not federally taxable as income. All right, you'll see that a lot of my slides today I'm going to skim over them very quickly. I honestly, contrary to what my slides look like, I hate clutter and a bunch of words, but this is for you, the employees, and your close friends and family. It kind of uses a document just to refer back to. And I guess we should probably take time to update anything that's out of date, as it's already been pointed out. Anyways, the basic eligibility requirements are right there. The one I want to point out and we'll spend some time on is that those individuals that can be claimed as dependent of another on their tax return are not qualified or eligible to receive these rebates as of now. Now that description there excludes dependents that are under the age of 17, so dependent children. So basically, if you're 17 years, if you're 17 or older and depend on another kind of for over half of your support and living expenses, you're not going to qualify for a separate advanced payment amount or economic relief amount. A lot of folks that earn a lot of money every year, if your AGI is too high, you're also going to become ineligible at a certain point. So those are the basic eligibility requirements, and that's just for the 2020 tax credit. In order to, the mechanisms that the IRS is going to use in order to get these advance payments out quickly and have the taxpayer not have to wait to file a 2020 tax return, next year sometime. This is kind of what they're using. They're going to look to a federal income tax return for 2019 first. If not there, they'll go back and look to 2018. If neither of those are there, they'll look to see if maybe the reason you wouldn't have filed those was because you're on Social Security benefits or something similar. And even still, you'll have individuals, U.S. citizens with Social Security numbers that don't, make too much money, that are still eligible, but none of that applies to them. For those individuals, we'll cover in a minute. There are resources kind of rolling out that for them to find a way to have access to the recovery rebate that is presumably there. So back to our Q&A. How much will my tax credit be? And you see there on the screen, $1,200. That's where the $1,200 comes from. For a single taxpayer, a head of household, or somebody married filing a separate return. It's $1,200 for each individual that's married filing jointly. And then there's an additional $500 for each dependent child under the age of 17. So we talked about some of the eligibility requirements and thresholds starting, if you make too much money, these checks kind of not likely not coming your way and you're not being eligible for a credit. That's kind of detailed there below. I'm not going to worry about the technology right now to show you, but when you get the slide deck, this rebate calculator down at the bottom of this slide, it's just it's halfway down this screen. It's a good article, a good resource in general that is the Tax Foundation that I've found. They have, they post really timely updates. Anyways, there's a tax calculator, or I'm sorry, a rebate calculator within this page where you can enter, you can look back to your 2019 tax return, enter your AGI, enter your filing status, and it'll give you a projection of what your rebate amount would calculate out to. This is kind of just a visual that the same Tax Foundation resource page puts out. It just kind of shows you a comparative of some of the situations, more likely situations that exist out there. So you can see there that anyone making between $0 and $99,000 that's single with no children is going to receive their $1,200 check or direct deposit until they start making $75,000. Then that $1,200 starts to slowly whittle away to zero once they hit the $99,000 mark. Similarly, those married filers are going to receive their $2,400 until they hit that threshold. What was it, 150,000? At which point they'll start phasing out to zero, all the way up to 198,000. So when you start adding on children, it gets a little bit more dynamic. But anyways, that tax calculator and there's a ton of resources out there. Just type relief rebate into Google and you will be flooded. How's the IRS know if I'm under those income thresholds? Well, like I said, they'll look to your 2019 tax return if they don't find one, because you probably haven't. Going back to the beginning of this presentation, right? Tax day is extended. Many people probably, especially the procrastinators like me, took full opportunity of that and are just pushing stuff off as long as possible. So a lot of people wouldn't have filed a 2019 tax return to this point. So if that's not available, they'll look back to 2018. And then this just reiterates that they'll look to other tax forms that come through the Social Security Administration for others that didn't file a tax return. Here is a link if you have potentially have close friends or family members that none of these bullet points on the top section apply to. They can. This is the IRS link to system where they can submit their information as long as they're a U.S. citizen or permanent resident and have a Social Security number. Maybe they haven't filed tax returns because they haven't been required to. They're under the income threshold to even file a tax return. They can go to this website, put in their information, and they'll get put on that list to receive those direct payments, potentially even in the form of direct deposit into their bank account if they provide their bank account information. So when it's time moves slower for us all in these times, these days, but I don't know if it's just me. Others that I've talked to feel the same way. It has just felt like a decade since this information has come out, and people are checking their bank accounts every day with anticipation and not seeing these rebates yet. Again, supposedly the IRS has tweeted. I didn't know the IRS tweeted till I was doing research on this, but they tweeted that they started this issuing rebates via direct deposit on Friday. I think I even saw Mnuchin quoted that most everyone that's provided direct deposit information would receive their payment by the end of this week. So is there a chance I can get this advance payment in the form of a check? Yes, to the extent the IRS doesn't have banking information for you, they will be cutting paper checks. And that process is supposedly set to start April 24th. But launching this Friday, I believe it's Friday, right? It's the 17th. If you, you can imagine how slow cutting paper checks to millions of Americans is going to be. If you think that the IRS does not have banking information for you and you don't want to wait around, I've seen some projections out till September, October. If you don't want to wait around that long for the stimulus payment, you can access this website that I've linked here. Again, that won't be up and running until the 17th, but you'll be able to submit bank account information to get taken off the paper check list and presumably put on the direct deposit list.
So we had a quick question before you move too far away from dependent. Is the dependent qualification based off the 2019 tax return? If a person was dependent in 2018 but not 2019, would they still qualify for the rebate?
So yeah, that gets into some of the things that I'm not worried about us jumping the gun at all. That I believe the answer to that would be that if your 2019 return was filed and on file and you don't have a dependent listed that was a dependent in 2018, then the IRS is not going to issue $500 for that individual. So I wish we could have offered this information as more of a planning tool a little bit earlier, but we're talking the bill passed at the end of March. We're probably 17 days from the date that it passed. And a lot of this stuff wasn't made clear until kind of there was commentary offered through Treasury or the IRS, but they will go to your 2019 tax return first. So if there is not a dependent on that 2019 tax return, they're not eligible. If there is a dependent, but presumably if they really aren't dependent on the 2019 tax return, and they're providing over half their support, they're going to file their own tax return in 2019. So it would behoove that individual to get their tax return in quickly, and they'll receive their own $1,200. So hopefully that answers that question. But I have numerous examples that kind of walk through scenarios like that. So I think this was actually the question that probably kind of spurred this whole thing, and that was from internally. Will I have to pay back the amount that the IRS gives to me once I file my 2020 taxes? I guess I have to caveat this by the professionals and tax consultants and lawyers out there that I respect the most are all echoing the same answer in no. But I have come across and read, articles out there that don't intend to give information. They just punt on this question. They just say it's still unclear. But the fact that it's unclear and knowing how tax return credits work, a lot of the tax professionals or consultants or lawyers are saying there is no mechanism for, as it currently stands, for the 2020 tax return to be filed and for there to be an amount that has to be either repaid or taken into income or something of that sort. So, and even the language in the bill in the CARES Act actually states that this calculation works where you'll take the tax credit amount eligible for per your actual 2020 situation and subtract whatever payments you received in advance, but not below zero. It uses those exact words. So I'm I don't know, 95% confident. I'm 99% confident that right now, as it stands today, the answer is no. And I don't think that that'll change. And you'll find that the best tax minds out there, at least that I know and trust, would stay the same. So can the IRS kind of garnish this or hold back this payment or this credit to apply to other liabilities, tax liabilities, or kind of other legal obligations that the IRS typically has access to subject to federal garnishment? In general, the answer is no. I think the exception that I've heard is that they can do this if you are behind on your child support. Stealing a little bit of JT's thunder here, so I won't go into too many details, but look, fraud is pervasive, especially with regards to these, when the government's issuing, free money, in effect, the fraudsters are going to come out in droves. So the point here is, that to reiterate, the IRS won't ever call you. They won't ask for the money back, especially not in a postcard or on a phone call or an email. So just be aware that there's a ton of different mechanisms that the fraudsters are out trying to get taxpayers scared enough to, or antsy enough to get the payment that they're scamming people left and right. I think the one that I heard of now that the IRS has actually started making deposits, the scammers are issuing what looks like IRS official documents or letters that say you were overpaid, because most people in their head, right, have that $1,200 number. That's just kind of the thing that sticks out, and that's what people know this by. And if you receive more than $1,200, you might be thinking, shoot, did I get too much? I should probably pay this back. Don't worry. Whatever the IRS used to make payment to you is yours. You can keep it. You can use it however you see fit. Don't pay it back. When you file your 2020 tax return and you see that maybe it was too much based on your 2020 situation, again, you're not having to repay any of it to the IRS. So the point there really is just don't get scammed into giving up any of your funds. I walked through a couple of examples, kind of a lot of them similar to what those weird situations that can creep up, like the question that was asked. I appreciate that. Timing wise, it's still presumably in your control. If filing a 2019 tax return would help you as a taxpayer receive a larger stimulus payment, then do everything you can to get it in, I'd say today or tomorrow, because I do think those direct deposits are on their way. And it could be past that point of no return, but luckily, if the payment is too little, like I said, you don't have the money in your pocket right now, but in 2020 you will get the full amount that's coming to you. So what is in your control potentially, if you haven't filed a 2019 tax return yet, is getting that in if it would behoove you to do so. And these examples kind of walk through some of that. This is just an example of, in general, it's a long-standing and pretty solid rule that if you're married and you file separate, usually that's not going to benefit you in any way. However, with these recovery rebates, could there potentially be a situation where you're married, but you file separately in order to maximize this advance payment? And I think the real question there is, there's certainly a situation where that'd be the case, but does that outweigh the tax burdens that come, the potential extra tax burdens that come with married filing separately? You just have to project that out. And I or any of the tax professionals in the firm would be happy to help you look into that. The example here is you have husband and wife, one earning 150, one earning just 50, and if they file joint, there'd be they'd hit the phase out. They wouldn't qualify for any economic stimulus payment. But if they filed separately, presumably the wife could, since she only has the AGI of 50,000, she'd qualify for a full $1,200. So there's a little bit of gamesmanship that can be played, I guess. These are just some more examples. Again, refer to these later. They talk about exactly what I was talking about, the timing of the 2019 return. Now, on the flip side, I think that I'm going down a rabbit hole, so I'm going to skip over that. All right, let's ask our first poll question, Liza.
Great. It's actually our second poll question.
Oh, I'm so excited.
And I'm going to launch that now. So go ahead and answer it if you are trying to get that CPE credit. Cool, we're getting close to the same responses as question number 1, so I'll give you another 10 seconds or so to click that option. All right, awesome, thank you. We will have one more before the end.
All right. I know we're up against it, so I'm going to move really fast so the important information from JT can come to you guys. All right, so that was all related to the economic stimulus payments. Again, I expect if you have your deposit set up, they'll be in your accounts by the end of the week. Time will tell. The other small changes that happened that kind of apply to the masses. Retirement plan distributions, usually there is a 10% penalty for taking any distributions out of your retirement account before the age of 59 and a half. Under the CARES Act for 2020, so long as you meet some criteria, you can take a premature distribution from a qualified plan and not be subject to the 10% penalty. As is always the case, the distribution is still subject to income tax, especially the earnings growth in the case of a Roth. But the income now, another change that the CARES Act made is that this income can be spread over 3 years, starting in 2020, unless the taxpayer elects otherwise. I'm not a retirement plan tax expert. I never got too far in these weeds, so I'm hoping that we can get more resources from our tax teams to clarify this. But there's also language in the act about if you're putting the distribution back into a qualified plan within 3 years, you avoid paying that tax on the distribution. It just counts as a rollover. You can also borrow from your plan. The old rules before pre-act would state that if you took a loan from your qualified plan, you could borrow up to $50,000. Well, I guess it's the lesser of 50,000 or 50% of your vested balance, I think. But under the CARES Act, they've raised those limits. You can borrow $100,000 or the lesser of $100,000 or 100% of the vested balance of your account. You have 5 years to repay the loan from your account to avoid income tax. You have 180 days from the enactment of the CARES Act, which is March 27th. You have 180 days for the loan to be issued, for it to qualify under these provisions. And then they also allowed some relief for loans that were already outstanding from your retirement account. So if you already had a loan that you had taken out of your 401k or other qualified plan, and it was due to be repaid to your account between March 27th and December 31st of this year, you can delay repayment for up to a year and still avoid paying tax. There's a new deduction for everyone for charitable contributions. I guess I should not say everyone, but a lot of taxpayers in the past, there'd be no benefit for donating to charity from a tax perspective if you didn't itemize your deductions. And after the Tax Cuts and Jobs Act, the big tax reform bill that was kind of, President Trump's claim to fame. After that passed, the charitable contribution itemized deduction became very, it didn't get used quite as much as it used to. Anyways, so long as you don't itemize deductions on your tax returns, starting in 2020 and beyond, I believe there's a $300 up to $300 cash donations to certain charities. You can take an above the line deduction. That means the deduction before you arrive to just gross income. So that's going to benefit anyone giving cash to charities that typically didn't receive a tax benefit because they didn't itemize. Oh, they also raised the limit. Typically, you can only contribute 60% of your AGI and have it count as a charitable deduction. So for 2020, the CARES Act basically changed that to 100%. So you can effectively get your AGI, your adjusted gross income, down to zero by giving all your money away to charity. And then quickly, some changes on student loans. Employers can reimburse employees up to $5,250. This has always been a rule, and the point here is that they can do it tax-free. This is a deduction for the employer, where the employee doesn't have to pick it up in income. They've always been able to assist with tuition and related fees the employer has. Now, under the CARES Act, the employer can do this, can still do it like that, or they can actually make a payment towards an employee student loan. And then many of you that have student loans probably already know this, but the student loan payments are suspended between March 13th and September 30th without accruing any extra interest. The experts out there, they'll say keep making payments if you can, because since interest isn't accruing, you're making principal payments that are paying your loan down a lot faster. Likewise, I guess I failed to mention that the experts would say back on the retirement plan changes. I don't want to offer investment advice, but the overwhelming majority of advice out there is to not touch your retirement unless it's an emergency, even though there's these enhanced provisions to allow you to take funds out with the deterrence kind of set aside for the time being. All right, I apologize for taking most of the time there, JT. Hopefully we can spend some extra time and go over, or we'll run through this stuff really quickly, but I'll turn it over to JT for the cyber and tech issues.
Yeah, so in the interest of time, I'm going to go ahead and launch that last poll question, and JT is going to start talking. If you can stay, it would be great if you did. If you can't, then obviously we'll have the recording that you can review later. So I'm going to go ahead and launch this question, and JT, you can start talking about some of the things that you guys have seen.
Yeah, absolutely. For those of you, I think we're all becoming very accustomed to this remote workforce strategy, where we're using collaboration tools such as GoToWebinar, Zoom meetings, Teams, things of that nature. And one of the most common things that we've been getting feedback from, our technology clients is around concerns with the Zoom platform. And so for those of you that may not be aware, over the last couple of weeks, there's been a number of security issues related to the Zoom meeting platform that have come to light due to this current pandemic situation that we're in. And many of our clients are concerned, rightfully so. And if you're conducting business with them, or if they've got meetings set up with you, and then at the last minute they're asking you to shift to a different platform, a lot of that's driven because of these security concerns. And one of the things that we've been telling our team, and what I'd like to share with you, is that when these topics come up, I would reemphasize to the clients that we're here to support you, and we're flexible, and understand that none of these collaboration platforms are perfect. Prior to the pandemic, one of the statistics I saw recently is that on a daily basis in North America, we'd conduct anywhere from 20,000 to 30,000 web meetings a day, and that's vendor agnostic. At the start of this pandemic, about a month ago, the first day out, most providers saw a jump, and the average is now sitting somewhere around 2 to 3 million a day. And why that statistic sticks out and why it's important is that this is becoming the new norm on how we collaborate amongst ourselves, how we collaborate with our customers. And we need to be cognizant of practicing good etiquette, making sure that we're sharing meeting details with the appropriate people, not reusing meeting links for multiple clients. And when you have that kind of adoption of any technology, it draws scammers, right? Bad guys, hackers, whatever you want to call them. And what they're doing, right, is trying to prey on our fear and our sense of urgency. And we all have some level of that, due to the current environment that we're in. And so be very mindful not to, click on links that don't make sense, and make sure when you are getting meeting invites, they're from individuals within the organizations that you expect to get a meeting invite from. The other trend that we're seeing, and I think we're going to see even more of it now that the stimulus checks are starting to go out, is that there's a lot of misinformation around funds. There's misinformation around bill payments. I've seen a number of phishing campaigns going around related to community information in relation to the pandemic. So in your daily lives, and as you talk to your families, again, don't just click on every random pop-up or email that you get in relation to COVID-19. Make sure you're going to trusted news sources. If you're interested in tracking the pandemic, there's a number of news agencies, as well as one of the software partners we work with, a company called Domo. They've got an online tracker. Go to those sources to get your information, because again, the scammers are trying to leverage this time so that people slip up. Another common one that we're seeing, and this hit some folks in my family over the weekend, is that they got a random phone call actually saying that they were from it was either Zoom or one of these collaboration platforms, and the individual said, "Hey, we're calling you because we think you have a virus. Please walk through how to do this." And in this time, right, we're all stuck at home. We're adapting how we run our personal lives and how we communicate with friends and family, and we're trying to leverage these tools. And so, you might want to just make sure that your mom and dad or your grandparents, are aware that these are scams, right? And that they're trying to make sure you're educating them as well, because One of the things that I've seen through this transition of kind of being stuck at home is that there's definitely a generational gap on how we leverage these tools, and that's not meant to be derogatory in any stretch or any mean, but I think even Saturday Night Live this last week, which they did, each one of the comedians did it from home, and irregardless of if you watch the show or not, they actually had a skit around this very topic on certain members of certain generations having a hard time with these collaboration platforms. And so again, make sure that you're educating your friends and your family, and be mindful that when we communicate out as an organization, it's going to come from our executive leadership. When you're working with clients, make sure that the meeting invites and the information you're getting from them is related, is actually related to the folks that you work with on a day-to-day basis. And just be mindful again, because the bad guys are trying to leverage this as an opportunity. And if you do happen to run into any clients that have issues, we've had a few folks get caught up. Feel free to reach out to me directly. I'm happy to help, regardless if it's a client or you personally or a family situation. Myself and members of my team are always happy to be a resource to the rest of the Richey May family. So with that, and I know I talked really fast and gave out some different information, but just be mindful and be cognizant that a lot of the things that you're seeing pop up are not legitimately tied to the current pandemic situation. And with that, I would say everybody have a wonderful and safe afternoon.
Awesome, thank you. Like I said at the beginning, we'll send out that CPE credit to the people that said that they wanted it in that first poll question. And also our IT team has been really helpful to me in particular of helping know how to report things, phishing and stuff. So make sure that you're using them as a resource, because as JT said, they're kind of the bad guys are waiting for you to make one silly mistake. And I'm sure we've all received at least one, if not a couple spam emails and phone calls that have some of those malicious links, and hopefully no one's clicked on them. So we'll distribute out the recording for this, and also we'll have a link to some trusted resources coming out soon. I think they've already been posted on A Day at Richey May, but we'll also have some PDFs coming out from Kathy to you guys. And with that, thank you very much and have a good rest of your day.